Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're going to be talking about dividend investing. But we're not talking about how to pick dividend stocks that you can buy on your platform. I use EasyEquities. What I want to talk about today is the date that you need to know as an investor. These dates are important for investors so that they understand what is happening in the market. This video comes from this. I asked a question in the YouTube channel. I asked subscribers and viewers what kind of topic they would like us to cover in the channel, and one subscriber responded to say that can we talk about the dividend dates? So you can see the question from the screen what exactly she asked. So based on the question, then this is why I made this video. So there are some important dates that you need to know as an investor. For example, just in short, you just need to know when the company declares the dividend. So basically, when the company comes up with the result, where they will be telling you the revenue that the business generated and the profit. And then as you go through those results, you will find a point where there's a dividend declaration. So that dividend declaration date is important because you need to know when that dividend was declared. Well, most investors, this is not important to them. They just want to know whether the dividend has been declared or not. But now once the dividend has been declared, then something that you need to know, there's a date where you need to own the shares in order to receive the dividend. But it's a series of dates, and we will be going through those dates. I will just quickly share my screen with you so that you can see this date. We are going to use cents, or we're going to use a result from Remgro to check that information. Okay, so now when you're looking at this screen, for those that will be watching this video, if you're on TikTok, don't worry, the video is going to be uploaded on the YouTube channel. So make sure that you subscribe to the YouTube channel, and then you won't miss this video. And then you'll be able to see what we are talking about. So as we are looking at the result, we can see that, like I said, we are looking at a Remgro result. Remgro, it's a diversified company. They have a stake in different businesses. They have interest in banking. They also have interest in some chemicals, hospital. They have ownership of Mediclinic. They own a bit of Mediclinic. They own a bit of F.I.R.E. But if you just go through the portfolio of Remgro, you will see that they've got a whole lot of different companies in their portfolio. So now the result that we have for, let me just see when the result came out. So it's a summary of the unaudited result for the 6 months that ended, I think that was in December 2021, and then they said that it's a dividend declaration. So this result, they came sometime this year. They came on the 24th of March 2022. Then what we see from this result, what we want to talk about is the dividend declaration. You look at the top there, the salient features. They start by covering the result. They talk about headline earnings per share, then they talk about earnings per share, and then they speak about the interim dividend that they declared. They said that it increased by 67% to about 50 cents per share. Then as you scroll down the result, then you come to the important part that we want to talk about today, which is the declaration of the dividend. Remember, I said that we see that they have to declare the dividend. So the company does a business, they generate revenue, and then if they make enough profit, then the board can or the executive management can propose to the board that they declare the dividend. And then once the board has declared the dividend, then it comes here with the result. So from this we can see that they do tell us that there's a dividend declaration. Then from the dividend declaration, another thing that is important is the dividend withholding tax. Whenever you receive dividend, you're going to pay a tax of about 20%. So the company declares a gross dividend, which is before tax, but what is debited or credited. What is credited into your account is a net dividend. So from this we can see that they declared a dividend of 50 cents, but the net dividend or after tax dividend, it's 40 cents. That is taking into consideration the 10 cents that you paid in the form of tax. Then as you go down there, so now these are the important dates that you need to keep in mind. So remember, now we know when the dividend was declared. That was the 25th of March. Then they say the last date to trade in order to participate in the dividend is 19 April. So this means that by the 19th of April, latest before the market close on the 19th of April, you need to have these shares in your name, right? What does that mean? You can still buy these shares on the 19th of April, but the shares won't be in your name yet, but at least you will have those shares. It will be recorded that you are a share owner of Remgro. Then there's this date, shares trade ex-dividend, which is just the following day. So in order to participate, you need to trade on the 19th. Then after on the 20th, now the shares they start to trade ex-dividend. We'll talk a bit about this ex-dividend. So what does this ex-dividend means? It means that after this day on the 20th, then now these shares will be trading lower. Now we are using Remgro as an example. Let's just pick a number. Forget about Remgro. Let's say the share price of the company that you're interested in buying is 100 Rand per share. Then they declare a dividend of 10 Rand. So meaning that from the date of dividend declaration up until the date of ex-dividend, the share price can trade at any price. But on the ex-dividend date, what normally happens is that the share price of that particular company, sometimes it does not always happen. I don't have fact to say that it always happen. There are times where I've seen it happen. There are times where it didn't. Not to say that it didn't happen. I just didn't see it on the chart. So if the company declares a dividend of 10 Rand, then you will expect the drop in share price of 10 Rand per share. Other people believe that it always happens. I do not dispute that. You just have to pay attention. So once the share is trading on ex-dividend, then make sure that you check if maybe there is a decline in share price on that particular date. Just check if it's now trading on ex-div. If it's trading on ex-div, then it is expected that the share price can drop by the amount of the dividend that is declared. Like I said, it does not always happen. When I was still trading CFDs, depending on the broker that you are using, the broker can either adjust the share price to include the dividend price, meaning that in case the actual share price drops by the dividend amount, on your platform it does not drops. Other brokers, they don't do that. The broker that adjusts it, they will actually pay you the dividend even the share price it drops, so at least your trading won't be affected. So that is the ex-dividend. So now what does this mean? The ex-dividend simply means that the share price will have dropped or might have dropped by that dividend amount. So now what happens if you buy the shares on the ex-dividend date, right? Because that is what is important, because some people are trying to know or are trying to figure out when can they buy shares, especially if you don't have the desire to keep those shares once the dividend has been paid, right? So ex-dividend simply means that the share price will have dropped by the amount of dividend is been declared. But it can mean that if you buy after that date, you might not receive the dividend. So now I know sometimes people, they buy shares after the ex-dividend, but they still receive the dividend. So now this is the other thing now that is important that people need to understand, right? So we spoke about the shares trading at the ex-div, but now there is a record date. That is the date that is important. I think, in my opinion, the record date is more important than the ex-dividend date, because on the ex-dividend, that is when we expect the share price to drop by the dividend amount. But the record date, it comes after the ex-dividend date. What does the record date means? It means that the company register. Remember, the companies have registers. They have a record of every share owner. So they look at those records. They check who owns shares in those particular companies, right? So once they have an idea of who owns the shares, then they know who they are going to pay the dividend on the dividend payment date. In this case, you look at the date difference. The record date is the 22nd of April and the payment date is the 25th of April, meaning that the dividend is going to be paid 3 days after they've recorded everyone. So what does this mean? You can buy the shares on the ex-dividend date or after the ex-dividend date, which is like the 20th in this case. If the record shows that you are the shareholder, even though you bought the shares on the ex-dividend date or after the ex-dividend date, you can still receive a dividend because on the records it shows that you have the shares. Okay, the people that want to sell shares, you hear that the dividend is declared on the 25th, is 50 cents per share. You want to participate, then you buy those shares. Then on the 20th of April, you sell your shares because now the shares are trading ex-dividend, right? So now it happens that when the dividend is paid on the 25th, you still receive the dividend. How does that happen? It's simply because if you sold your shares, let's say for example you sold your shares on the 20th of April, but the record on the records on the 22nd of April still show you that you are a shareholder of those shares, then you can still receive the dividend even though you have already sold your shares before or after the ex-dividend. You can also sell your shares before the last date to participate and still receive the dividends. So what is important is knowing when is the record date and pray and hope that your name will be there on the record date. Once your name is there on the record date, then you are definitely going to receive the dividend, whether you had or didn't have the shares on the ex-dividend date. So now why does it happen that you still receive the shares even though you have already sold your position? I'm using EasyEquities, so I'm just going to show you a statement from EasyEquities. On EasyEquities, when you make a transaction, they send you the statement. On the statement, there's something that they call a settlement date, right? So this is what can affect you, whether you are getting dividends or you're not getting dividends. In this case, it says that all proceeds from the sale, but in this case we're talking about buying, but the rules almost apply. So they say all the proceeds of the sale of the shares will be paid into your EasyEquities account only after the settlement of the trade. In this case, they make an example of T+5, right? What does this T+5 means? Some companies, they will quote you maybe T+3 or T+5. This simply means that on the date you make that transaction, it can take about 5 days to process that transaction. Yes, on your account, your capital will be quickly credited back into your account and you will see that man almost immediately, but the recording of that transaction is still going to take some time. And during this period, that is when you see that the date of record is just 3 days after, the date of dividend payment is 3 days after the date of record. So if it takes about 5 days, then it is possible that you can receive the dividend even though you no longer have the shares, right? So now, just to speak from the context of people that are interested in investing, not just playing around with the dividend date, buying the dividends and then getting they just buy the shares, they are on record, then they exit their position, then they receive the dividend. From an investor's perspective, the date that are important is to know when the dividend was declared. In this case, it's the 25th. Then you need to know the last date to trade in order to participate in that dividend payment. Then what happens on ex-dividend is that the share price can drop by the amount of the dividend that is declared. Also, at the same time, it means that the people that buy the shares on the ex-dividend date moving forward might not receive the dividends. It's not guaranteed that they won't receive the dividend. Then the most important date is the record date, because if your name is not there on the record date, then by the time they pay dividend, they won't pay you the dividend. It doesn't matter whether you had the shares or you don't have the shares. If your name does not show on the record, then you can just forget about those dividends. So I hope that in today's video I was able to clarify a bit those dates. Yes, it's a bit complicated because it is common that we focus on the ex-dividend or on the date to participate in that dividend payment, but the one that is most important is the record date, because it doesn't matter whether you have the shares or you don't have the shares. If your name is not there on the record date, you are not going to receive those dividend. So just a quick recap. We said that the date that is important is the declaration date when the dividend is declared, but we don't really care about this because we are just interested in the numbers. Is the business profitable? Is the company going to pay us dividend? Then the last day to participate, we normally call it LTD. We will see here on shared data how they normally call it, depending on the platform that you're using to get information. I mostly use shared data because it's free. I can get all the information. Compared to MoneyWeb, you can see the recent stock exchange news services on MoneyWeb, but not all the other ones unless you have subscribed. Then from the last day to trade, then you need to remember the ex-dividend date, meaning that the share price you can expect the share price to drop by the amount of dividend that is going to be paid. And then you remember the record date, which is the most important date that you have to remember, because if your name is not showing in the company books on the record date, it doesn't matter when you bought the shares, you are not going to get the dividend. Then obviously in the end we are looking at a dividend payment date, which is normally plus 3 days after the record date. So those are the dates that you have to keep in mind. So just check your broker statement and try to see when your broker processes how long does it take your broker to process that transaction. In my case, I'm using EasyEquities. They quote me T+5, so it means that if I want my name to be on record, I need to try by all means to own those shares at least 5 days before the record date, because if I buy the shares maybe let's say 3 days before the record date and my name is not recorded on the company books, then I cannot receive, or I might not receive the dividends from the company, even though I bought before the ex-trading date. So that's it that I wanted to share with you. So if you found this video useful, please make sure that you like it. If you haven't subscribed to the YouTube channel, please consider subscribing. Your subscription, it helps us to grow the channel, and also the engagement. If you have a question, write it in the comment section, then it helps us to come up with content that is relevant to you. Like we saw in this case, it's a subscriber that requested that we cover this topic. So yeah, that's it that I wanted to share with you today. I hope that our dividend investing journey is going to continue to be a success. Maybe in another video we will cover how to select companies that can pay you dividend. We've already created such content, but I think it might be worthwhile to recreate that content so that people can figure out how we are able to find those companies, because not all companies are going to pay you dividend. But dividends are not everything. It's nice to receive a dividend, but you shouldn't miss out on other good companies simply because they are not paying dividends. So that's it for today. I will see you on the next video.